In this presentation, we will discuss the debt service fund for governmental accounting. General long-term liabilities are accounted for in the debt service fund. When we consider the debt service fund, remember that we're talking about a governmental type of fund, and therefore we're on a modified accrual basis as opposed to a full accrual basis, and that means that we're not going to have long-term liabilities. So we're not going to have the actual debt in terms of the liability recorded in the debt service fund, but we will record the financing, the activity within the debt service fund, more of the flow-in activity. We'll have more information that we would see in temporary type of accounts. Those accounts we would think of as kind of equivalent to income statement type of accounts in a for-profit type of organization, those that would close out to what would be the retained earnings or what would be the capital account, or in our case, in terms of the fund accounting, the fund balance. Multiple issues of long-term debt can be accounted for in one debt service fund that issues subsidiary records to track the individual issues. This means that we could have one debt service fund that will have multiple debts that will be tracked within it, but if we do so, then we want to have the subsidiary ledgers to give us the detail behind what's being tracked in the one debt service fund. It is also possible for us to have multiple debt service funds, so it's not the requirement for us to just have one debt service fund within the organization, within the entity, as it is a requirement for the general fund. When we think about the governmental funds, we typically have one general fund, and then we're going to set up as many other types of funds as is necessary given the conditions that we are in. The debt service fund is a governmental type fund, and therefore it's going to use the modified accrual basis. So we're not using the accrual basis, we're using the modified accrual basis, so it's going to look a little bit different than what most people are used to. One of the major differences is going to be that we do not have the short-term or the long-term assets and the long-term liabilities within it. And we're, of course, dealing here with liabilities, so we're not actually going to have the long-term liabilities as we would expect to see in terms of an accrual basis. So when we think of things that are going to be debts, things like bonds payable, we're not going to have the actual bond payable in the debt service fund. That will be recorded, however, in the government-wide type of activities that will be on an accrual basis. This, of course, will make more sense as we work through problems and compare and contrast the government-wide activities with the debt service fund, it being on the modified accrual as opposed to the accrual basis. The debt service fund is used as both a budgeting and accounting entity. It allows for planning and management of long-term debt. So that means that we are going to put into place the budgeting for the long-term debt, and because it's a governmental type of fund, we will then actually post the budget. So we'll estimate the budget, then we'll post the estimating accounts, the budgetary accounts, something we don't typically see done in normal type of accounting, in accrual type of accounting, something that we won't see done in the government-wide type of activities, but in the modified accrual, we will see those budgetary entries being recorded actually to the general ledger in a similar fashion as we've seen in the past to the general fund. Interest payable is not accrued in the debt service fund, but is recorded at the government-wide level. So when we think about the interest payable, we're typically thinking about an adjusting entry that might happen at the end of the time period. So you could think about the idea of us having a bond on the books if we're talking about the government-wide level, or in terms of a for-profit entity. At the end of the time period, we're going to have some interest that may have accrued, which we have not yet paid. We typically record a credit to a payable account at that point in time and debit interest expense. Now, under the modified accrual basis, you might say, well, we wouldn't do that because we're not going to record the payable. But on the modified accrual basis, sometimes we have the current liabilities. And if it's interest payable, you would think, well, maybe we would have the interest payable on the debt service fund because it's going to be basically short term. However, because it's going to be related to the bond payable, we don't typically record the accrual, that type of accrual, on the debt service fund, even though it may be basically a short-term type of liability or a current liability. That adjusting entry is recorded on the government-wide level, not recorded on the debt service fund level.